we go.
Hello everyone, this is John with Money on the Floor Currency Trader, and this is our day trading template, and I have added a few more indicators and I'm putting them out there so that you know how to put them on, you know what they are, and you know how to use them. So right now I added right here the RSI. It's called the RSI histogram. That's all the name is RSI histogram. You look it up. I didn't change anything on it. I just put it on. It worked great. So what it tells me is, if we go back, and also there's another one on here which is called the ghost tangent crossing. Basically it's a trend line, but it's a newer style of trend line. It does like a curve. You can adjust it to your preference right here on the pivot, so you can do that. And also on the zigzag you can play with both those numbers. I'm still playing with it myself, so I'm still working on it, but this is what I've added to my chart, and I'm trying to share what I do because it what works, so that you guys can emulate it or try other things. And if you find something you like, please share it with me and we can share it with everybody if it works. I mean, that's what it's all about. So basically we come into here. I like running it on a 10-minute chart. The reason why is it gives me the bigger picture of what's going on, and that's really what this chart is about. It's about first getting you in the right trade and keeping you in the right trade. Now what I would do is have one template open like this all the time and not close it, and then also have one at 5-minute and possibly 3-minute. And the only reason for it is, or at least one at 5-minute, then you can change it back and forth. The reason is if you're coming down to, let's say, this area, and right now it looks, let's say we think it's going to break and we want to see if it's going to break, but it takes a long time for the 10-minute to tell us. So we can always jump down to the 5. That's when I start jumping down, is the only reason. And I start seeing, okay, we've already broken, but we had a buy, we have another sell. Looks like it's trying to go down. The oscillator is trying to go down, bearish momentum, and also the RSI histogram is saying down. So we have many reasons to believe it's down, but let's say it was still a little bit green, then we could go down lower. So the 5-minute's already saying that's trying to change. Then we could go lower. We can go to, let's say, the 2-minute chart, and it'll say, oh yeah, we are selling since back here. We tried to go up, now we're trying to go back down. We're down, we've been down since this point. So then if you helped you make your decision on the 10-minute to sell, then you could possibly sell maybe on the 5 or get out of the trade. Maybe you were in the buy and you wanted to get out, so now you know for sure to get out instead of waiting for this last minute. But that's how I'd use the smaller time frames. Basically I really like the 10-minute. I think the 10 minutes where it's at, because long run it shows you where you're at. So the idea is, if I take this here and move it back on the charts, you can see right here we had that big drop over here, and that was where the sell came in. Boom, right about there was good. That's basically where we saw it was good. Both charts coincide, and basically we got a momentum move. After the momentum move, see this curved line that comes down? This is telling you that's the momentum move. Once we go past that curved line, we are now consolidation. So it's best you take your money and stop trading. Once you got the B, which is B for break to the upside, definitely exit the trade. Also, you saw the cross here with a little bit of gap. Now the RSI is still red, so you might want to hold it because really the whole thing is a downtrend. But you got to remember what time of day it is, how long you want to be trading. You already made your money. It's definitely going sideways. It may drop more. This is considered a flag pattern. But do you want to be involved with an accidentally explosion? Usually it keeps going down the same way all day long, but today is just about over. So actually day is over. What am I talking about? So, but still, you know what I'm talking about. So this one here is telling you the overall trend is down. This one is saying it's down only to this point. After that, we're consolidation. It would told you to get out. Once the white line crosses below and it's selling, definitely be out of any buys or any sells. And so right now we have this one here was buying at this point. This one told you at this point you should probably get out. Also, the trend line told you you should probably get out. So that's how I use it. Hopefully that helps you in your trading. Let me go over it just a little bit more. So basically, if you go back to MOTF, I think there's no adjustment on that one. UT bot, I have 2 and 9, so that's what I'm trading on that, just to verify. And then the ghost pivots, or ghost tangents, I don't know why I call them pivots. It's from Chart Prime, basically 30 and 10. You can adjust this, it does change things around. You can change the colors a little bit, works out good. But the main thing is what we're using down here, which we already know about this one. I don't think I changed this one at all. Let me see. No, 12, 12, 12, 12, 20, 30. The big thing on this one was over here. I made it the RMA instead of anything else because you could do the WMA. And you can try different things. Don't be scared to experiment. But right now I found that's the one I like the best. And I changed the color of the white line so I could see it better. And that made me a little bit bigger, easier to see. And then also we got the RSI at the bottom, which is the RSI histogram, which we click on. We don't change anything on it. It just gives us a verify that we're going down this whole time. So how I would use it is that right in here it's going down. It's saying buying. We're saying we're confused. That means consolidation. It's better just get out of the trade. And this also told you that the trend line that came through here has been broken. And we know once you break the trend line to get out and keep your money. You're only a profitable trader if you keep the money. If you have a habit of going back in, you need to stop doing that. It's a bad habit. Now, if you like going back in, get a demo account, get any other account you want, but the one that's feeding your face, the one that's making you money, the one that's taking care of you, you need to take care of it. And that is on the momentum move is done, you need to stay out of the trade, because no matter what the trade is, we have a momentum move up, it goes sideways. We have a momentum move down, it goes sideways. So we have a little momentum move up, sideways, momentum move down. So you need to stay out of those. And these pivots, or these ghost tangents, are what tells you. So this one told you it was a buy. Since over here, even though we had a pullback, it still said buy. This said buy. There was no reason to get out of the trade there. Now you could have exited and got back in. It didn't really make a difference. It's all a personal preference, but it went all the way up, and you can see this line curved all the way up there. At this line here broke, it told you to get out, but this one here up here, when you saw it break that, you know you could probably get out because that's probably the end of the move, and it was. So it works out pretty good. Same thing with this one. It was the end of the move. This one down was the end of the move. So that's why I leave them on there, just for that reason, so I know when the end of the move is. So maybe I can actually stop trading and keep my money for once instead of giving it back, giving it back, giving it back. We all can make it, but we all give it back. The market is designed to take your money. So if you do what they designed it for you to do, which is to trade all the time, you will lose. That's how it's designed. But we need to be smarter than that. We need to have an impulsive move and get out. Impulsive move, get out. Impulsive move, get out. That's what we're looking for, is the impulsive move. And for that to be, we need to have green, white above, everything green. Now you got impulsive move. When you have difference, like a green, and it's up, and it's red, that is not a good move. You stay out of that trade. When everything went green, 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 yes, you get in the trade. Red, 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 you get in the trade. This one here was still saying, it was saying buy at this point. Yes, it was saying buy and buy. So at that point, you could get in. You get out right there. Selling did not happen till way over here. And then you would sell this to back down. Do not get aggressive and get in early. You only lose money. This is a sideways move. It's just going to mess you up. You just stick to the rules. So I haven't written these down, but this is what I do. I will try to type them up and have them for everybody because it works. I don't think I'm going to change it any more than this. I'm happy with this. This is what's making me money. If it's making me money, you can make money, but you got to stick to the rules. Okay. Thank you so much. Any questions, get back to me. And as soon as I get a format with a PDF, I will send it out to everybody. But I'm hoping this helps you. These are the added indicators. These are just free indicators, but you have to have the paid subscription on TradingView because you can't put that many indicators on. So if not, you just go ahead and put the background on. That would help you alone. So the main thing is, though, is to make money in the markets. And this is what's keeping me in longer and getting me out at the right place so I don't make bad decisions. It keeps me from me. So hopefully it keeps you from you. All right. Thank you so much, everybody. Bye-bye.